Welcome once again. Today we're going to take a look at depreciation. Once you look at your question, your exam question, you find out that the examiner might ask using straight line method, reducing balance method in one additional information, in one question. They will ask you to calculate furniture and fitting using straight line method, motor vehicle using reducing balance method. Now this thing goes a long way confusing some students. So in this video we are going to calculate it together. Here the furniture and fittings, here 20%, 500,000. We're going to use what? Straight line method here, and we're going to use reducing balance method here, so that you see the difference and see how it works, right? So without wasting much time, let's kickstart it immediately. Now this is the cost of the assets, and the percentage is 20%. Here 20%. For the purpose of this lecture, I'm using 20%. This is furniture and fittings, motor vehicle. This is the cost amount. Now this is assumed to be the first year. So what we do first is let's put addition in case there is no addition. I just want to do it the normal way you do your PPE schedule. That is the way I'm doing it. Then you bring down your 500,000, your 300,000. Right now, what is the next thing? You get your accumulated depreciation. The accumulated depreciation for the first year is what? Is nil. Then what we are looking for now is our yearly depreciation. Yearly depreciation. Now this is where we apply the method we're going to use now. This is straight line method, and this is reducing balance method. Now 20% of 500 will give you what? 100,000. That is our yearly depreciation. You get? That is to say 500 times 20% divided by 100 will give you 100,000. That is to tell you that this asset will last for 5 years, because this 100 is what you apply every year. Now reducing balance method, 20% of this figure will give you what? 60,000. Now just watch, you see where the difference is coming, from. Now this is the accumulated depreciation. Now let me do it in a normal way. Add up these two will give you 100. This will give you 60. Right? Good. Now your carrying value now will now be what? 100 minus 500 will give you what? Remember, this one is a minus. This will now give you 400 as your carrying value. 60. This figure minus this figure will now give you what? Will give you 240. Please use your calculator to confirm what I'm doing. Now this is now the carrying amount for the first year. Now for the first year, you will not see any difference between straight line and reducing balance method for the first year. Let's continue with the second year. Permit me to rule this line. Let's say second year. Now this is what we're going to do. The cost It's 500. Now, the reducing balance method will not recognize the cost again. It will recognize what? The carrying amount, which is 240. Just keep watching. Now, is there any addition during the year? For the purpose of this lecture, there is no addition. So this will now give us 500,000. This will give us 240. Now, do we have accumulated depreciation? Yes, we have. We now have accumulated because this is the second year, right? Because this is the second year. Our accumulated depreciation here is 100,000. Our accumulated depreciation here is 60,000. Now, what is our yearly depreciation? Here is still 100,000 because same amount is apportioned every year in straight line method. But in reducing balance method, straight line is not apportioned every year, right? So here now, what is our yearly depreciation now? What we do here now, we'll now say 20% that we use initially on this carrying amount, on this 240. Now the 20% was used on this 500 on a straight line, on a straight line to get us this same 100. Now we are going to use 20% on this carrying amount. It has reduced from the normal cost to this because of the depreciation. So we charge the 20% on this. So 20% on this will give us what? Please use your calculator. Will give us 48,000. So when you sum these two up, this will give you 200,000. When you sum these two up, 60 plus 18 plus 48 will give us 108,000. Right? Good. Now, let's get our carrying value. The carrying value now will now be 500 minus 200. This will give you 300,000 as the carrying amount. Now, here now will now be 240 minus 108,000. Here will now give us 192. Is that okay? Now we are going to solve for the third year to make it more easier for us so that we understand more. But before we solve that, let me explain. We charge 20% here on the carrying amount. Remember, this one keep carrying 20% that will give us this 100. But because we use 20% here to give us 60, we might not see it. It's giving us 240. Here now we're using 20% on the carrying amount, not on the cost again. Right? Good. Let's solve for the third year. With the third year, I think you understand better. Now, third year. The third year. Let's start with the cost. I love doing this so that you learn how to prepare the schedule also. The cost here is 500 for straight line. The reducing now, we pick 192 because that is the carrying amount. Right? Is there any addition for the purpose of this lecture? There is no addition. This will give us 500. This will give us 192. All right. This is the carrying amount. We are picking the cost for straight line and we're picking the carrying amount for reducing balance method, which is what we have here, right? Good. So the next thing now is what? Our accumulated depreciation. What is our accumulated depreciation? The accumulated depreciation here now will now be 200, which is this 200,000. Then the accumulated depreciation here will give you 108,000. 108,000. Now let us solve our yearly depreciation. Now the yearly depreciation here will still give you 100, because 100 is apportioned every year, because this asset is going to last for what, 5 years. Let me still put, if you use 20% of the on the cost, it will give you 100. Here now we're going to use 20% here. It has reduced. Remember, initially we used reducing balance method. We used 20% on the 300. It reduced to 240. We used 20% on that 240 again. It reduced to 190. Now we're using 20% on the 190. That is to say, as on each carrying amount, we are applying the rate on each carrying amount. But straight line is equal apportionment, right? Good. Now, what the 20% here will give us, please use your calculator to confirm my figures, please. So this will now give us 300. Hope you are seeing what I'm doing. Now here will now give us 146,400. All right. Now the carrying amount, the carrying value here will now be 500 minus this will give us 200,000 as our carrying amount. Now here you will not say this minus this. No, you say this minus this. When you say 38,400 minus 192 will now give you 146,400. No, sorry. The carrying amount will now be 153. So sorry about that. Because this minus this, please use your calculator to confirm it. Will now give you this. So this is the carrying amount. This is the carrying amount. Now here it is 48 minus 240. That will give us 192. Let's confirm it. 240,000 minus 48,000. Hope you're seeing it. Oh my god, my calculator is 240 and 23 minus 48, 192, which is this. Right? So it is this figure, the depreciation, yearly depreciation minus the carrying amount. But in the straight line method, we are using this, the accumulated depreciation, to minus this to get the amount here. But here you don't use the accumulated depreciation because it is not an equal instrument. Sorry, it's not apportioned equally, right? It's not apportioned equally. So here we use this minus this. 192 minus this will give us this. This is the accumulated depreciation. When you add this and this is the accumulated depreciation. But here now we have the accumulated depreciation like this. Since we are dealing on the cost, we'll say 500 minus this will give us 200. But here we are not dealing on the cost, but on the carrying amount, the carrying value. We'll now say 195 minus 38,400 will give us 153,600. Hope you understand it. That is how direct, that is how straight line and reducing balance method works. Now let me show you one thing again. This amount, the yearly depreciation, is what you charge to your cost of sales. That if the examiner is silent, you charge it to your cost of sales. That is to say, you debit your cost of sales. Very much. I believe this video helps. Please, you can share and subscribe to our channel to encourage us. Thank you very much. If there is any question, don't fear to put it in the comment section. I will always respond to that. Thank you very much. See you in our next videos.